All right, we finally got a red weekly close for the Nasdaq 100 and the SMH Semiconductor ETF. We broke our win streak. We closed down on the week, and I want to talk about why this is a high stakes area now for the market. We've got two very important forces that are enacting on the market right now, and the other side is starting to tip to have some more importance. I want to talk about where I see the rest of this month going, the portfolio updates I made this week, and some trade ideas later in this video. So stick around. Thanks for joining. Let's get into it here. We've got two forces that are enacting on this market. They're fairly obvious at this point, but I think you need to have the right frame of mind to understand this market dynamic that we're in. This bull market has been really led by a very concentrated group of stocks, right? We know what they are at this point. They are very semiconductor, top heavy, AI CapEx build outs, electronic components, anything that's going into the build out. That's what's working. That's what's moving the market up. Now, on the other side, we have this macro, sort of regime that is getting worse for the market. We have rates which broke out this week and saw acceleration to the upside. We see oil prices moving back up towards highs. We see inflation expectations going higher. And none of that matters as long as the left side, that reflexive machinery, continues to be greased and continues to move up. So if everybody's still herding in and the flows are coming into this concentrated market, the warning signs actually don't matter until they do. And this week, we finally have some cracks which tell us that it's time to at least be aware of what's lurking on the other side here. This macro sort of regime, which got a lot worse this week, is now something we need to consider. And so I want to walk you through kind of, the mindset we need to have now as traders here, and again, just to frame this in the proper way, it's like when everybody's asking, well, is this a bubble, right? Because I don't want to buy it if it's a bubble. And that's actually the wrong frame of mind. If you're a trader and you can identify a bubble, the thing to do is to buy that asset, right? You want to participate in bubbles. They are extremely profitable. You just need to know when it's time to get out, right? Obviously easier said than done, but you need to at least escape, 20% from the highs and not ride it all the way back down. That's your goal. Participate, just don't ride it all the way back down. That'll be important as we start to frame some of these charts. Now, last week we were talking about essentially rotation versus money leaving the stock market. And what I was hoping for to see this week was rotation. Semiconductors could come down, right? Leadership could start to deflate a little bit, but we wanted to see that broaden out to other areas of the stock market. I don't think we saw that. I'm going to walk you through some of the evidence. So here is the weakening market regime. This is the 10-year Treasury yield now knocking on 4.59 going into the weekend. We saw a big breakout move here on Friday, and we are now up to year-to-date highs. This is what the multi-week time frame looks like for the 10-year Treasury yield, and we are approaching some pretty significant areas, basically the highest yields we've seen, in a couple of years. Not quite up to the 2025 highs, but this is where we need to start being very aware of sort of the air pocket that could be here if we get a stumble in the AI trade. If we move on to the semiconductor weekly time frame here, this is the SMH ETF. Now look, this is this is relatively minor at this point. There's not any big technical damage. So you might say, well, Evan, gee, you're making a lot of noise out of the first down week. And that's true. But this chart actually was taking probably 30 or 40 minutes before the market closed. Take a look at the volume that's coming in here. We know as traders that volume peaks at turning points. We're going to look at some other charts in the second half of this video that shows this, but generally speaking here is, if you start to, the higher you go and the more sort of parabolic that advance is, the more thin ice you're on, right? You can you have a lot more grace and flexibility with these types of things in a gradual move up in a market, because things tend to work themselves off over time and divergences kind of clean themselves up. When you go straight up, you have to keep the music playing. You cannot, lose your beat for too long. Otherwise, you really do risk kind of giving back a significant amount of the rally. Here's the SMH daily chart. And, we'll look at charts again in the second half of this, but I think this sort of action here to start off the week, this I believe was Tuesday. This is fine when things are advancing. To get a nice shakeout for a day, see it hammer out, and then get follow through, that's perfect, right? That can keep the momentum, the music's playing. After, if you come back down and retest that so quickly, just a couple of days later, you're going to come kind of test this area. That's when things start to just get a little more dicey. Again, these are very short-term tactical price action signals that we're keying off of here. The trend, obviously, right, very much up and to the right. Trend followers don't care about any of this short-term noise. But when a market has gone parabolic, broken records for the speed at which it's advanced, these things become important. So this is what we're going to be keying off of in this week's video. Micron obviously is kind of the epicenter now. NVIDIA and Micron are the two most important. You can see again, had a nice little kind of buy the dip opportunity here in the beginning of the week. That's good to me. Charts moving up, you get a 1 or 2 day shakeout. That's fine. If you start to move back up and then you fall back so quickly, this is where I'm not so excited about buying the dip, right? So this was a note that went out Thursday to subscribers for Quant Rockets. And what we noted in our quantitative work is our swing trade environment kind of had a notch down on Thursday of this week. So we finally got a slight downgrade. We're still in an quote unquote excellent environment for swing trading on the long side, but there was a notch down in that rating. And we also had our bearish sort of internal secondary reading move outright to the bearish side for market internals. So we kind of got two quick strikes on the market on Thursday after the close. And we're going to look a little bit more at that in the second half of this video. 52-week highs, this is the other thing I've been keying off of, is just what do market internals look like? Can we get rotation? Can the market broaden out? And the answer is no. It's just continued to flatline here. We are staying approximately 110, 120, 130 stocks making 52-week highs. And if anything, this week, we saw the number of stocks hitting 52-week lows start to rise a little bit from their sub 50 readings. If we take a look at percentage of stocks above a 20 SMA, we're continuing to come down here. And if we look, well, I guess that's it. We'll look at some more stuff later in the video. Here's the performance this week. It was driven by oil. Everything else was down across the board. Gold hit the hardest here, down 4%. Here's the S&P 500. Take a look at the right-hand chart. This looks a little dicey here on the Friday close. Volatility started to move up. Not that much up, though. I mean, it's going at 18. You're basically just at a week or two-week highs, 3-week highs. The market really isn't pricing in too much fear at this point. Dollar index up and to the right. So this is now moving up, putting pressure on those commodities, dollar denominated assets. Here's the 10-year Treasury breakout. So we looked at this chart earlier, but we finally got, not finally, I mean, we got an urgent sort of swift move up on Friday. It's not just in the US here. This was seen across the world. So even though it might not be so specific here to the US per se, it is still notable, and this still is a problem here for US equities if 10-year treasuries remain, especially at the rate that they're going higher. Look at the top 3 winners this week. So you got XLE, which we have talked about as being the kind of pure hedge in this environment. Then you have healthcare, and then you have consumer staples. Those are your top 3 winners this week, which is a classic risk off safety. I'm going to call XLE safety in this regard, in this regime. And so that is certainly notable. Our smart trend filter, as it looks across sectors, we did get a significant downgrade this week across the board. You still have tech, which is in an uptrend, consumer staples, and energy. Everything else kind of in the middle here. Again, these aren't quite outright bearish per se, but you are getting more in the mixed territory. And then you have financials and utilities, which are still printing bearish signals right now. Put to call ratio, again, people aren't hedging all that much. This is Thursday's data. It's not Friday's data. So I would expect to see probably a reversion to the mean here into Friday. But generally speaking, you're really still not seeing a ton of fear out there. Bitcoin. I do want to talk about Bitcoin in the second half of this video, but it's still floundering here. I don't like the price action we saw this week. We'll talk more about that as we move along. Next week, we got FOMC, so we'll get some minutes out. Notably this week as well, we had Kevin Warsh get confirmed by the Senate, so we have a new Fed chair out in front. So this will be interesting to see how he handles rapidly rising rate environment with all these inflationary pressures. And we'll start to get some color as time moves on here. So we're going to look at some charts. I want to shout out our sponsor, though, IBD, who helps make this episode possible. We've got links in the description of this episode to get some discounts on their Market Surge platform and their IBD Digital. I highly encourage you to check that out once you get done watching. And now let's get into some charts. All right, we've got some charts in front of us. S&P 500. This is a weekly time frame. You can see the rejection that we did get this week off of the highs. Now, we still managed to close just marginally green here in the SPY. Price action is very innocent at this point. I would still say, right, just keeping zoomed out high level view, here's your big intermediate level line in the sand for this market, 695. I mean, maybe this is the start of a pullback to that level, right? I don't want to make a claim like that's going to happen because who knows? But this is still the big elephant in the room where if you want to keep this longer term momentum intact, that's what I'd say needs to hold. Now, if we were to just frame that out, that would give us, approximately a 6 or 7% pullback. It's pretty innocent in the grand scheme of things. I will point out, though, the pullback that we saw from February to April was about 9%, and it felt like the end of the world during that, 9% SPY pullback. So if we did see another 7% one back into the 695, the SPY is going to mask a lot of the individual stock carnage that would happen in that scenario. So we're not there yet, right? We're just looking high level at what's going on. We've got this nice topping tail up here. Here's the daily chart. Again, not a very good 3-bar pattern where you basically have, or really if you take it back, you've got a sideways kind of chop range that you were in for a few sessions. You finally started to break out. You got a nice gap up move here and follow through. And then you gap down. It's not quite an island reversal, but it's pretty close. And you sort of left everybody up here chasing this breakout or, the new highs on Thursday in the dust, taking losses. And so here we are. So again, we'll need to see how this action firms up or shows up on next week. I would suspect that we're in pullback mode here. Maybe it's just 2 or 3 days, or maybe it's something longer. That's what we're going to have to see. Obviously, this weekend, anything can happen with President Trump, the administration. There could be some de-escalation in Iran. And boom, the bid is just right back into this market. And here we go, zooming back to new highs in semis and everything else that's been working. Very plausible. That's what makes this so darn tricky. You just have to kind of know where you are on the field, I think, and understand the risks that we're playing with right now. SPY here, again, in the short term, you've basically just got this little pocket right in here that you'd want to see us, 733. If we gap down on Monday and we, gap down into 731, 730s, we find support, we start to rally, then maybe that was it. It's just a 2-day little shake. Market can heal itself and the music continues to play. Very possible. We do have an open gap down here around the 720s. And then again, your bigger area right now for me is about that 695 or so zone. Nasdaq 100, here's the action here. Again, this is kind of what I said about the semis. We had a nice shakeout day here on Monday. What was this? Tuesday. I keep saying it's Monday. On Tuesday, we had this nice kind of shakeout here intraday. Dip buyers came in. Life was good. We hammered out, and then we found follow through. And now here we go again, kind of rejecting and moving back to this area, and volume picked up on Friday. So it's just not the ideal situation when you're already running a pretty vertically, ascent here. If you throw some trend lines on here, again, I'm not a big trend line advocate because you can always kind of manipulate them. But if you just kind of try and get this general trajectory, then oops, Friday we're starting to peel off a little bit on the underside of this. Volumes picking up. Russell 2000, you're breaking to 6-7 day lows, and you're starting to lose this area right in here. So again, you're kind of violating this market breadth, and this rotation didn't really pan out, and you're actually just starting to get kind of weakness in equities and kind of a flight out perhaps into, say, the dollar, which is now, kind of breaking out here on Friday. So that's the lay of the land. I think it feels like we're in short-term kind of pullback weakness territory. That's the way I'm reading it. Might be innocent. Our swing model would still say, hey, expect a pullback, but it's probably a pullback you still want to buy at this point, or attempt to buy. So that's the kind of the way we would still frame this out in our mind. Let's take a look at some other charts here. We talked about the VIX. I will say, again, when we just look at the ingredients here for a potential short-term pullback, the VIX is at 18. The last time the VIX was up around 20, 25, 22, anywhere in this regime up here, here's where the S&P 500 was, back here, right? So, kind of coming out of this initial correction territory, but this is when everybody was fearful. There's a lot less fear in the market, but we've covered a lot of ground in a straight line, right? Again, kind of hindsight here, looking at points on a chart. You can dispute this different ways, but generally speaking, I'd say the VIX is not that high given the potential turning point that we find ourselves at. Oil here continues to move up. This is USO. We could look at futures, but USO ETF, not quite an all-time 52-week high or multi-year high close, but pretty darn close, and it looks like it wants to do that next week. So that's a problem. We already talked about rates. Here's IEF, which is just the bond fund for the 10-year. You can see that there. Gold performed terribly. The second, really, Friday was most of the pain here, or Thursday, Friday. You can see that we actually got a little bit of a kind of island top here in GLD. This has been a very messy pattern. Last week, we talked about rotation potentially into metals. I didn't really call out gold as much as I called out silver. Silver looked okay coming into the week, and then look at the failure to hold those gains. So rotation did not happen, especially in metals, anything that dollar denominated. We'll look at crypto in just a little bit, but there was no saving this. GDX, again, looks pretty sloppy now, and some damage that's been done. Silver miners, same thing, selling off. So those all just haven't panned out, and they look like they're going to need at least more time before you would take another shot there. Let's talk about crypto, because this is certainly what's been chopping my tactical trading up for sure. My Galahad system, that's green on the year. It's doing its thing. Quant Rockets is having an amazing year. My short-term tactical crypto has been terrible. It's just lots of, false starts, breakout, and momentum. It's not working right now. I expected, I put out a video and several tweets back in the middle of April pointing out that, if we started to break above 76, 77, I was looking for a pretty quick move up into the 90s. That was the thought process I had for lots of different reasons I talked about in that video. And it's been very sluggish here, and it is starting to get to the point where it is taking too long, and this becomes a problem for me now if this sees weakness. Because for me, let's just look at IBIT for the easier way to look at this in TC 2000. IBIT, the range was not that big this week, but you can see we basically tested last week's highs and didn't quite bearish engulf last week's bar. Again, we're looking at IBIT 5-day on a 7-day traded product, but for easy illustration purposes, this rejection here and kind of right where all of these cluster of highs have been, if we we're kind of looking over a ledge here, in my opinion. And if we see a swift follow through next week to the downside, this is going to be a very tough spot for crypto bulls, Bitcoin bulls. So this to me is now getting more tactically in the penalty box here. It's been very difficult to get a clean momentum trade in Bitcoin all year long. So we'll see. We had good news out of the Senate advancing clarity, which is not, still needs to get voted on by the full Senate, but we did get, good progress there this week. Still wasn't enough to really move the needle here and get anything going. IBIT does have an open gap to fill around 43.60. Maybe you call that as the last kind of line in the sand here, where it needs to put in a higher low versus, like 75K, 76K in the spot price for this to, remain intact. And if you start to lose this 76 area, then I think you're just going to get a lot of folks that are going to want to push this back and retest the 60K. So we'll see. Our Galahad system is still long on Bitcoin. It has a pretty tight leash, but that system is still long. My tactical systems are all basically back out of it. So it's been kind of a frustrating place to trade. So I think that is pretty much all the stuff I wanted to talk about. On the positive side, Nvidia, right? Largest company. Friday's action was terrible, but on the week, you're up 4.5%. Apple up 2%. Those are the two largest companies in the world. So when those two are working, again, it speaks to the masking of a lot of the breadth and problematic, kind of base of the market, so to speak. All right, let's take a look quickly at our trading system. So here is our main dashboard for subscribers. This is Friday's numbers. S&P down 1.21, Galahad down 3%, Quant Rockets down 3.5%. So a tough day for the model portfolios here. We got some sell signals, we got some commentary. Galahad mostly getting dragged down because all of its trend positions getting hammered. It's in Bitcoin, it's in the Nasdaq, it's in gold, and all of those saw some pretty tough showings on Friday. We do have some protection in, we've got stops in, so those can't go too much lower before our risk management principles start to override. I want to show you our market environment score though, because this is what's most interesting. We did get, again, that red bearish sort of notch down on our swing environment. We're still in the excellent swing environment. We've been so for 27 days. You can see it here in this chart. So there's no change to that, but we did start to weaken that gauge, and we did get outright bearish on our under the hood market participation. So you kind of got two notches here, which told us the market environment is weakening. And so we certainly saw that on Friday. Let's take a look at some of we got one new buy signal for Friday. So I'll just share it with you here. This is FN. So this is the way new buy signals look. So FN, this is again, just a monster, AI beneficiary. It's been on the list here. I mean, look at this chart. It's totally, it's detached from any market weakness. It's just trading at all-time highs. It's up 58% on the year. It is one of those that is, the music's playing and we're trying to keep this ball going. So our system is saying, okay, it's time to get back in again. Our initial stops around 638. Earnings are plenty away. Environment's still good. Industry's good. And this has been a performer on our model, basically looking back over past trades and historic trades. You can see here are the exits. So again, I'll just kind of show you this whole dashboard here. Here are the exits. You can see down here, Oklo, right? SMR, some of those nuclear plays that we highlighted earlier. We're starting to now bail out of these trades. Held them for a few weeks, tried to get them going. Looks like they're going to be break-even trades, slight losses. Notice, though, also we had a bunch of profit targets hit. So 65% gain there for Datadog, which we talked about in a video. A-Lab up 78%, hitting our third profit target. So again, if you're managing risk, you're taking profits into strength, you're cutting your losers quick, right? This is trading 101, right? Try and make your winners bigger than your losers. Have some discipline, You still can participate in this market and look for opportunities. I think FN is another one. You just have to recognize that the macro, the landscape here, if the music stops in this space and you start to get this air pocket of risk that comes back in, if semis start to take a stumble, if you start to get some negative headline, if you start to get whatever, delays across data centers, or we can't get helium or whatever the case is, then that's what potentially causes this to unravel quickly. We're not there yet. We just want to be open-eyed to the risks here. I think there's still plenty of opportunity. This is a trader's market, and hopefully this video helps. So that's what I've got. We've got tools, we've got trading systems, we've got all the goodies in the links in the description. There are links in this description. So thanks for making it this far. Have yourself a great weekend. We'll see you back here next Friday. Take care.